Dear students, today we will solve one example of bonus shares in subject Advanced Accounting and Auditing paper 4 for class 2nd year BCom semester 4 Veer Narmad South Gujarat University. Here is the question. The balance sheet of A Limited as at 31st March 2013. Liabilities amount, assets amount. On liability side we have authorized share capital 1,50,000 equity shares of rupees 10 each, amount rupees 15 lakh. Issue and paid up capital 80,000 equity shares of rupees 10 each, rupees 7.50 called up and paid up. Total amount rupees 6 lakhs. Reserve and surplus. Capital redemption reserve 1,50,000. Plant revaluation reserve rupees 20,000. Securities premium 1,50,000. Development rebate reserve 2,30,000. Investment allowance reserve rupees 2,50,000 and general reserve 3 lakh. Total on liability side rupees 17 lakhs. Whereas on asset side we have sundry assets amount rupees 17 lakh and balance sheet tally with rupees 17 lakh. The company wanted to issue bonus shares to its shareholders at the rate of 1 share for every 2 shares held. Necessary resolutions were passed. Requisite legal requirements were complied with. First, you are required to give effect to the proposal by passing journal entries in the books of A Limited, and B. Show the amended balance sheet as per schedule 3. Dear students, this is very comprehensive example where we have to issue bonus to make our partly paid up equity shares fully paid up. Then again we have to issue bonus shares to our fully paid up shares. After issuing bonus shares, we will have to prepare an amended balance sheet as per schedule 3. So very first let us understand the question. Here we are given authorized share capital 15 lakh rupees. This is just for information, not for bonus shares issue. Here issue and paid up capital 80,000 equity shares of rupees 10 each, 7.50 called up and paid up. It means our 80,000 equity shares are initially partly paid up equity shares, and as per the rules and provisions for issue of bonus shares, first of all we need to make our partly paid up equity shares fully paid up. So here we will declare bonus to make our partly paid up equity shares fully paid up. So bonus amount would be equal to uncalled amount, that is rupees 2.50 per share. 10 minus 7.50, that is 2.50 per share, multiply 80,000 shares. So it would be rupees 2 lakh. It would be rupees 2 lakh. So first of all, to make our partly paid up equity shares fully paid up, we need to give them bonus of rupees 2 lakh. And now we will have to make provision for this bonus. So we have reserve and surplus. Capital redemption reserve is not available for partly paid up bonus shares. Plant revaluation reserve is not at all available for bonus shares. Securities premium not available for bonus to partly paid up shares. Development rebate reserve and investment allowance reserve, these two are statutory reserves and not available for making bonus shares. So we have only one free reserve, that is general reserve, amount rupees 3 lakh. So out of these 3 lakh, 2 lakh rupees will be utilized to make our partly paid up equity shares fully paid up, to them bonus. Okay, after making partly paid up shares fully paid up, we need to give them bonus shares in the ratio 1 share for every 2 shares held. 1 share for every 2 shares held. So our bonus shares ratio would be 1 by 2. 1 by 2, and 1 by 2 of 80,000 would be 40,000 shares, and 40,000 shares of rupees 10 each. So bonus share amounts to rupees 4 lakh. Bonus share amounts to rupees 4 lakh. And now we will make provision for bonus shares amount out of reserve and surplus. First we use capital redemption reserve 1,50,000. Then we will take securities premium 1,50,000. So total amount rupees 3 lakh. And for balance 1 lakh rupees we will use general reserve. And like this, provision for fully paid up bonus shares amount will be done. So with this understanding, let us calculate the bonus for partly paid up shares and fully paid up shares first. Step number 1, bonus to make equity shares fully paid up. As we have already discussed, 80,000 equity shares are there, 2.5 rupees per share uncalled, total and final call due rupees 2 lakh. So bonus amount equal to final call due rupees 2 lakh, and provision for bonus out of general reserve rupees 2 lakh. General reserve, that is our free reserve. Now step number 2, bonus shares for fully paid up equity shares. Our bonus share ratio is 1 by 2. 1 bonus shares for every 2 equity shares held. It means a shareholders having 20 equity shares will get 10 bonus shares. 200 equity shares will get 100 as a bonus shares. So our bonus share ratio is 1 by 2. So number of bonus shares would be 80,000 shares issued by company. 80,000 equity shares issued by company multiply 1 by 2, that is 40,000 equity shares will be given by company as a bonus shares. And now bonus shares amount, that would be 40,000 shares multiply face value rupees 10. So total bonus shares amount to rupees 4 lakh. And now provision for fully paid up bonus shares. Capital redemption reserve 1,50,000, shares premium account 1,50,000, and balance from free reserve, that is general reserve, rupees 1 lakh. And like this, provision for fully paid up bonus shares rupees 4 lakh is done. Okay, now we will pass necessary journal entries. Journal entries in the books of A Limited. First we will pass journal entries for partly paid up bonus. First is provision for bonus amount. Our accounting entry, general reserve account debit rupees 2 lakh to shareholders bonus account rupees 2 lakh. Second entry for final calls due on equity shares. Our entry, shares final call account debit rupees 2 lakh to equity share capital account rupees 2 lakh. And third entry for issuing bonus amount, that is shareholders bonus account debit to share final call account rupees 2 lakh. Dear students, here you understand, in our first accounting entry, shareholders bonus account is credited with rupees 2 lakh, and same account is debited with rupees 2 lakh in third entry. So the shareholders bonus account is closed. Share final call account is debited in our second entry, and the same account is credited in our third entry. So share final call account is also closed. So finally two accounts remain. One is general reserve account debit, to equity share capital account credit. So like this, bonus amount is given to make partly paid up shares fully paid up. Here company does not receive any single amount of final call due from the shareholders, but makes provision for bonus in such a way that partly paid up equity shares automatically become fully paid up equity shares. And now we will see the accounting entries for bonus shares for fully paid up equity shares. Here are the journal entries for fully paid up bonus shares. First entry for provision of bonus amount. So entry is capital redemption reserve account debit rupees 1,50,000, securities premium account debit rupees 1,50,000, general reserve account debit rupees 1 lakh to shareholders bonus account rupees 4 lakh. And second entry for issuing bonus shares. Our accounting entry, shareholders bonus account debit rupees 4 lakh to equity share capital account rupees 4 lakh. And like this, our fully paid up equity shareholders may get bonus shares from the company, due to which our paid up share capital will increase by rupees 4 lakh. Okay, now after passing journal entries, we will prepare amended balance sheet as per schedule 3. But before that, we will make notes to the balance sheet. Here are notes on balance sheet. First is share capital. Authorized capital 1,50,000 equity shares of rupees 10 each. As it is, there would be no change in authorized capital. Issue and subscribe capital, it would be 1,20,000 equity shares of rupees 10 each, fully paid up. My dear students, our existing equity shares were 80,000 equity shares. Thereafter, company declared 40,000 as bonus shares, and that is why our total issued capital becomes 1,20,000 equity shares, that is 80,000 existing shares plus 40,000 bonus shares, and face value per share rupees 10 each, fully paid up. So now our issue and paid up capital becomes 12 lakh equity share capital. Okay, so share capital total amounts to rupees 12 lakh. Now reserve and surplus. My dear students, here you understand, from existing balances of reserve and surplus, only 3 balances remain after bonus shares, that is development rebate reserve rupees 2,30,000, investment allowance reserve rupees 2,50,000, plant revaluation reserve rupees 20,000. So total reserve and surplus available after issue of bonus shares amount to rupees 5 lakh. Because capital redemption reserve was fully utilized for giving bonus shares to fully paid up equity shares. Securities premium fully utilized. General reserve fully utilized. So only 3 reserves remain after provision of bonus. Now we will prepare amended balance sheet as on 31st March 2013 after provision of bonus. On liability side, we have equities and liabilities. First, shareholders fund, in which we have a share capital as per note number 1 rupees 12 lakh, and B, reserve and surplus as per note number 2, total amount rupees 5 lakh, and total on liability side amounts to rupees 17 lakh. On asset side, we have only one item, sundry assets, total rupees 17 lakh, because there is no change. And finally, our asset side total amounts to rupees 17 lakh, and our balance sheet gets tally. Dear students, first of all, understand the whole question from this video lecture. Then try to solve the same example in your notebook. Find out similar sum from your reference book and solve 1 or 2 example as a practice. Thank you very much for watching this video lecture. Very soon we will meet with another example in the same chapter.